Good afternoon. Thanks for joining us. My name is Andrew Zelmer, and I'm a land agent here at Peoples Company. I'm happy to be joined today by Steve Ferguson of the Iowa Ag Development Division. Today, Steve will be talking about the different IADD programs and how they can be an access to capital and tax incentives for both beginning farmers and landlords. After the webinar, we have plenty of time to field some questions. With that, I will pass it over to Steve.
Thank you, Andrew. Well, it's my pleasure to be here tonight, this afternoon. I want to start off by giving a big thank you to Peoples Company for being a sponsor for a conference we just had this week, and we really appreciate your support for that, and we appreciate the opportunity to continue working together to help beginning farmers in Iowa with their efforts, and we look forward to keep building on that relationship. Moving along here, we want to talk about some things that hopefully will be of some help for beginning farmers in Iowa. We have the Iowa Tax Credit and Loan Programs, and starting off with the Beginning Farmer Loan Program, a Loan Participation Program, and then two tax credit programs, one that we haven't even had the chance to launch yet, but I want you to become aware of it, that you can still take advantage of yet this year. Here is just a summary of the various programs and numbers that we've done. Our Beginning Farmer Loan Program was the first one that started in the United States, and it's the largest one in the United States. We've closed over 4,000 loans, $495 million. Tax credit programs that was started back in 2007, and we've had over 1,100 of those. And that's not including the projects this year. Loan Participation Program, we've had 111 of those. And then the Iowa Ag Youth Institute, which I would be surprised if there wasn't somebody online who was not a previous participant of that. But, however, our board, due to various issues, they canceled that program in 2013 to put more emphasis on loan and tax credit programs to be of more support for beginning farmers. Moving on to the Beginning Farmer Loan Program, what we do with that program is we sell a tax-exempt bond to either the bank or a contract seller to help them be able to finance a project for the beginning farmer. And with that tax-exempt bond, if it's a loan to the bank, the interest that is paid back to the bank is federal exempt taxes for the bank on the interest income. And if it's a contract sale, it's a heck of a nice deal. All of the interest, federal and state tax, is exempt for the contract seller. And I'll talk a little more about that in a little bit. But that's a nice benefit for the contract seller or the bank, but we require them to reduce the interest rate for the life of the loan for the beginning farmer. And that's our focus, is to help beginning farmers get some benefits and be able to initiate some relationships they may not be able to establish otherwise. And as I said, the bank's interest is federal tax exempt, and the contract seller's interest is federal and state tax exempt. And I might get off on a tangent to that on the contract sales. If you are able to buy a farm on contract, and the seller, again, all the interest is federal and state tax exempt, they still have to pay capital gains on the principal, but only on the principal they receive that respective year. And as I was talking to an elderly gentleman at a workshop we were doing it at one of the community colleges around the state, and he came up to me afterwards. He says, "Hey, I think I've got this figured out." He says, I don't hate paying capital gains, so if I would set up a contract with a beginning farmer for 30 years, and he says, I'm 85 now, it's pretty likely I myself will never pay all of that capital gains. It would be his estate that would have to pay it. So he's going to pursue trying to find some beginning farmers in his area to sell farms on contract. So I think that was a good approach for him to pursue that. Some of the characteristics of the Beginning Farmer Loan Program: there's no age restriction. We did a loan here a while back, several years ago, to a farmer who was 72 years old, and he had rented the farm all his life, and the seller put it in their will that when they passed on, he got first option to buy it, and he took it up, and he was so excited. So there's no age restriction. Beginning farmers can be returning to the farm. They can continue to work off the farm. There's no college education required. They can purchase from closely related parties on cash. They cannot purchase on contract. If they do purchase for cash, land and or machinery or breeding livestock, the asset they're buying has to be appraised, and that will need to be the purchase price. Now, I know Andrew and the guys here, and Matt and others, and John and Steve, they're aware of this factor that if a beginning farmer goes to an auction with his parents, and let's say the parents buy the full 160, but they're really planning to have the beginning farmer's son or daughter buy 80 of it. It's in their best interest to at that auction to do the paperwork so the respective names for the 80s or whatever how you're splitting it up are the names that go on the purchase contract that day. We had an unfortunate situation where family went and the mother and father bought all of it, signed the documents that day, and they were going to sell off, part of the farm to the son. Well, unfortunately, as I said before, if you buy from closely related family members, you have to have it appraised, and that is the purchase price. Well, that auction, which was kind of unique for the times, it went below what it was appraised at. But unfortunately, the beginning farmer had to pay the appraised price. So just a little heads up, if you do go to an auction and you and your parents are thinking about splitting it, try to have some of those details worked out in advance. And it may be unlikely that, it would be appraised higher, but I just want you to be aware of that so that you don't get caught in that unfortunate situation. You can use FSA financing along with this, and we really encourage that. We have a great relationship with all the FSA officers around the state, and I'll get into more details on some of that here in a little bit. Another, I think, a real compliment to the bankers around the state and the beginning farmers. Of all the over 4,000 loans we've had, the default rate is less than 1%. So that's a real compliment to all of you out there that have worked with us on this program. You can use the program to buy land, livestock facilities for cattle, hogs, and turkeys. We've done hardly very few turkeys, but we've done some cattle and a lot of hog facilities. You can buy breeding livestock, and then there's some non-traditional ventures as well that would qualify. The qualifications, at the beginning farmer has to have a net worth less than $691,000, and that amount changes each year, and we will be getting those numbers here probably in November. It's tied to a USDA index, an index that's tied to the cost of production, and as we all know, cost of production is going up instead of going down. So now I'm sure we'll be sending out a press release and some other notifications to everybody of what the new net worth qualification will be after the first of the year. But for the applications to the end of this year, the beginning farmer has to have a net worth less than the $691,000. You can previously own some land, but it has to be less than 30% of the county median. And for an example there, Cass County, it's 60 acres. And so those numbers are on our website, and you can go out there and see what it is for your respective county. An example of that, let's say you use the program first to buy some breeding livestock or machinery, and you can come back and then use what's left of the $501,000 is the loan maximum that you can use, $501,100. The maximum for farm improvements currently is $250,000. For new depreciable property is $125,000. Used depreciable property is $62,500, and then the lifetime maximum is the $501,100. Now, the conference that we just had, several states from all of the United States were here, and we're pursuing to get all of these numbers, these maximums, to all be able to go to the $501,100. I don't want to mislead you that we're optimistic on it, but we continue to pursue that because, farm improvements and new depreciable property, we just feel that if there's a venture or a project you want to do, we don't want to have you be restricted, for those factors. So Senator Grassley, I've worked with him over the years. He's kind of the senator grandfather, if you will, of the Beginning Farmer Loan Program, and he is very sincere in working with us to make changes that will be helpful for Iowa's beginning farmers. You, as a beginning farmer, must perform the management and labor of the project that you're taking on. You cannot rent it out to somebody else. We have several applications where the beginning farmer lives away from the community and can come back home on weekends and spring and fall to put the crop in and take the crop out. But you need to be the ones that's doing the project. And that's to help support you as beginning farmers and support the program so that we're not doing projects to, so to speak, investor young farmers or beginning farmers that you would be competing with. So that's one of the reasons for that. Corporations, partnerships, LLCs are ineligible. There is a $50 application fee, and then there's a 1.5% closing fee on the first $250,000, and then 0.75% on the remaining amount of the project that you do with us. And the minimum application fee is $300. The bondholder, either the bank or the contract seller, makes the credit decision. We are not making any decisions on the credibility of you as a beginning farmer with this program. We just determine that you're eligible as a beginning farmer and that you meet those criteria. So here's an example when I was talking before about FSA. It's a very popular program. It's called the 5-45-50 or 50-45-5. And essentially, as a beginning farmer, you only have to come up with 5% down. You can get 45% of it financed through FSA, and that's up to a maximum of $225,000 is their maximum. And then the 50% could be through us, through the Aggie Bond Program or Beginning Farmer Loan Program. Yeah, and by using the full $501,000 in this example, the purchase price in this case could be up to $764,315. Now, we've had a lot of projects that have exceeded that amount, and what usually happens in those cases is the lender will provide another loan, as a second mortgage, or some cases maybe the parents will provide help with some down payment, or the parents will help provide a loan on the side to help the son or daughter to be able to take on the project at these high land prices. So that's the basics of the Beginning Farmer Program. Our website has the application forms on there and the program summary with several frequently asked questions. And the basics, I probably should back up and say the basics of applying is you need to do the application form, and there is the application fee. You need a current financial statement that's no older than 30 days from the date you complete it to the date we receive it. That financial statement needs to be witnessed by a banker who helped you prepare that financial statement. You just can't put together your own numbers. We need to have a third-party ag lender help you prepare that financial statement. And then we want you and the banker, if it's a cash transaction, to provide a background letter that essentially tells about maybe your experience in 4-H or FFA, or if nothing involved with either one of those, that's fine. But what sort of experience you've had on the farm, what sort of education you have or experience you've had, that really can convey to us that you have the ability to take on this project. You don't have to own all of the machinery. When we look at the financial statement, if you don't have a planter and a combine, then we're going to be looking at your background letter explaining what you've got arranged to use a planter or the combine that you don't have. And in most cases, they'll put in there that you're trading labor for the use of mom and dad's combine or planter or uncle or somebody else, your neighbor down the road. So just give us the full picture of what's going on there so that it looks like you are really sincere in taking this project on, and you've thought through all the parameters or everything you need to meet. The applications are due on all of our programs the first day of the month, and then our board will take a look at them usually the latter part, the last Wednesday of the month. So I'll look forward to answering your questions when we get done here on anything on the Beginning Farmer Loan Program. Now, to move on to the Loan Participation Program, this program is to help you come up with additional down payment funds if you do not have them. The FSA 54550 has really been a good program that has helped instead of our Loan Participation Program, but we would still be available to help you with more down payment funds if you are not able to come up with what the lender needs. The Loan Participation Program is not available for contract sales, so we would be working with a bank. So the interest rate, if you do it in conjunction with the Beginning Farmer Loan Program, the interest rate on the loan participation program would be the same as the reduced interest rate that the banker proposes to you. And I should mention, as far as that interest rate that you work out with the banker, I really encourage you to put on your negotiating skills and, negotiate that rate down as far as you can. I'm a former ag lender. Ag lenders are out there looking for new, productive, professional, efficient, and effective, beginning farmers. And so they want your business. If they feel you're going to be a successful beginning farmer and they want to keep you on, for the full term that you're going to be involved out there in farming. So, be creative, tactful, professional, but, try to work them down. And I would also encourage you to shop around. I hope you already have a good relationship with your lender, and they won't be shocked if you shop around, especially when you're taking on a very significant purchase that's going to affect your operation for many, many years, if not the rest of your life. So they aren't going to be shocked if you go out there and shop around to get a better interest rate. And if you want to share that with them, that's your choice. So I'm just saying, get out there and I'm sure you're doing a good job trying to negotiate your reduce on your expenses and everything else. Well, this is definitely going to be a pretty significant expense that you're going to have every year on your interest, and so be creative and try to help them find a way to get you to stay there with them, but with a reduced interest rate. The loan participation, the maximum we can do on those is 30% of the purchase price, or $150,000, whichever is less. Now, our board is considering changing these numbers, but that's where they stand today. We've been having some interesting dialogues that with high price of land, 30% probably won't come into play on the purchase price. It's going to be the $150,000, and in most cases, you're probably going to need maybe more than the $150,000 to help you come up with the down payment funds you need. So, if any of you have any suggestions on that, I would be very receptive to receiving an email from you of what you think is, where we should take a look at it as modifying, these amounts, these maximum amounts. Ineligible projects and activities, you cannot finance any existing debt that's incurred more than 60 days prior to the loan approval. So back on that example, let's say you go to an auction, you buy it, and maybe you weren't aware of our program, and actually the banker closes the loan. You would still be eligible to get that refinanced as long as that loan was not closed more than 60 days prior to the date we approve it. Now, we had a case last month where that happened, and by the time our board was going to review it and approve it, it would have exceeded 60 days. So we arranged a special conference call for our board just to review that one application so they could get it approved within that window. We won't encourage you to to push that window, but that is an option, and we really would try to work with you to help you, be eligible and be able to use the program. Ineligible projects also personal living expenses, and farm operating costs. Those you'll need to go and get those arranged through your local lender. And then the down payment funds for the contract sales, as I said before, are not eligible for the loan participation program. The lender's involvement with this, they are essentially going to be having we will take what's called a last in, last out position, which the banker will like. If things go kind of sour on your operation and the lender has to sell you out, they would get paid on their funds first, and then we would get paid last. So that's what we call we would be getting in last, and we would take out the money that's left over after they get paid. So that encourages lenders to do these loan participations with us. They can also get a guarantee on their portion from FSA. The banker needs to complete and submit a lender security analysis, and those forms are all on our website. It used to be we had to be a little more, not critical, but a little more observant that you met the definition of low-income farmer, but we've got that kind of evolved a little bit. So I wouldn't get too concerned about that part of it. You probably all consider yourself as low-income farmers enough as it is, so that's not a factor overall with the application. You, as a beginning farmer, we now have the net worth on that has now been raised to $691,000, and on all our programs, they're all now at the same net worth. We had 3 different net worths, but the Iowa legislature changed that effective June 16th this year. You need to submit and complete all the application forms and related records, and then obviously we expect you to repay the loan in full. Applications again are also due the first of the month, and then they'll be reviewed at the next board meeting. The maximum debt level at the time of application cannot exceed $400,000 for an individual or $800,000 for a partnership or corporation. And essentially, the aggregate amount of the participated loan has to be less than 3 times the borrower's net worth. So if you have a very small net worth, that's going to be restricting the amount of how much of a participated loan that we could do with the bank. So you need to be aware of that. The farm debt to asset ratio has to be less than 80% at closing. Your current ratio has to be greater than 1.1 to 1 at the application. Your off-farm income, you can definitely have it, but it has to be less than 50% of the projected gross income. We really want your operation to be of size that you're involved as an active farmer and taking on this project. Collateral appraisals need to be completed by qualified third-party appraisers, and the property is not eligible if the house value that you're wanting to buy is greater than 50% of the appraisal. So again, we're trying to not have these loans be used for rural home loans or just acreages. We want to keep this program in line and helping beginner farmers to expand their farming operation, which will be an income generator for them. So that's the basics on the loan participation program. The agricultural asset transfer tax program, which we just call it the beginning farmer tax credit program, now has 2 components to it, and we're going to go through both of them. But essentially, this is to encourage agricultural owners of agricultural assets to lease their assets to qualifying beginning farmers, and essentially they will get a credit against their Iowa income tax. This was implemented in 2007. Last year we had 537 projects for $5.7 million of tax credits. We were allowed last year to award out or issue tax credit certificates up to $6 million, and I thought we were going to exceed it when we had such high prices last fall on those crop share leases. And I'll talk a little more about that in here in a little bit, some changes we've made. I think you all probably know what's an ag assets: land, occupational property, breeding livestock, machinery, and equipment. The key provisions for the taxpayer: they do need to be the owner of record of the asset. It's eligible to own land as a corporate asset owner in this project for these tax credits, but the taxpayer cannot be at fault for terminating a prior lease. And what we're trying to avoid there for your benefit as beginning farmers is that as cash rent rates and this sort of thing have gone up, if somebody comes down the road and drives into the owner's driveway and proposes a higher cash rent, and the owner wants to take up that higher cash rent, that's their prerogative, but they would probably be disqualified for being able to come back and use our program. Again, that's to help protect you to go through this program and not get outbid, by somebody else down the road. You can use this program, and I'll get probably more than that here in a little bit, but a minimum of 2-year lease up to a 5-year lease. And so we want that owner to, respect and honor the terms that you negotiate with them on that. The taxpayer cannot be a party to administrative or judicial action. They cannot be classified as a habitual violator of DNR, and there's a whole array of items there. They can have more than one tax credit or lease or leasee, with a beginning farmer, or it doesn't have to be a beginning farmer, but they can have more than one project going on with us at the same time. I think last year, we had one landlord and I think had 5 leases with 5 different beginning farmers. So then we issued 5 separate tax credit certificates to them for those respective amounts. If they are determined as being at fault for terminating the lease, then they will need to pay back the Iowa Department of Revenue. And so it's up to everybody's responsibility to keep us informed, if it's been terminated, and there would be an investigation of why and who's at fault. And if you as a beginning farmer are the one that's terminating it, then the landlord would be allowed to keep those previous tax credits. But if not, if it's determined that the taxpayer is at fault, then they would have to be paying those amounts of those tax credits back to the state of Iowa. The provisions as a beginning farmer, as it said before, that was $366,000, and now it's bumped up to the $691,000. You have to have sufficient education, training, and knowledge to operate the farm, and that's to, again, maintain the credibility of the program, that we're not just setting up these tax credits to somebody that really maybe doesn't have the ability or knowledge of how to operate a farm. They have to have access to working capital, and that needs to be addressed in your background letter that you submit with this application. And again, the beginning farmer has to actively participate in the management and labor of the operation and assume financial risk. I might mention of an application I was just looking at today. It's a 4-page application. 1 page is for the asset owner, 1 page is for the beginning farmer, and then there's a couple other pages they both sign, and it's kind of like true false, spelling out the terms of the lease, this sort of thing. And maybe we aren't clear enough with our instructions, but on the 1 page where there's filling out together, the beginning farmer part, where it lists the beginning farmer's name, and then if there's a co-farmer, like maybe he's farming with his brother or somebody else, then you would list both of the tenants' names on there. Well, this young guy was running this farm from his dad, and he put his dad's name in there. And so I've had a case and a discussion with Department of Revenue about this. That kind of, and then down at the bottom of the page, he signed as co-farmer, the asset owner. And that, the Department of Revenue was interpreting that the landowner he was running it to himself and his son, and then he was also going to get a tax credit on it. And that's pretty obvious. You can't do that. You can't rent it yourself and then get a tax credit on it. So they're going to have to resubmit that page where they take off his name off there as the co-farmer. So hopefully I'm making that clear. If not, we can address that later for the questions. As I mentioned, the provisions, you can go 2 to 5 year lease, and that's whether it's farmland, machinery, or breeding livestock. We do issue the tax credit every year by the end of January, and they are renewable at the end of your term of your lease, but you have to resubmit and be requalified. The net worth will be a higher amount, I'm pretty sure, because again, it's tied to a USDA index. And so, you do not have to, once you're approved for a project and your net worth is under, for right now, like this $691,000, you do not have to maintain your net worth under that during the term of the lease. But when you reapply, then you have to meet the specs of what the net worth eligibility factor is at that time. So I hope that makes sense to you. The amount of tax credit on a cash rent was 5%, and the legislature increased that to 7% of the gross income that you would be paying them for the cash rent project on their acres. On crop share, that was 15%, and they raised that to 17%. And if you are a military veteran, then the landlord would also get an additional 1% bonus during the first year of the lease. And so that's to provide some additional support for our military veterans who have, as we all know, made a huge sacrifice for all of us. And so they're having a rough time coming back and trying to get back into some land that maybe they rented for a while. And so that's to help encourage some of our landlords to rent to military veterans to help them get back into agriculture. And I also might mention I'm involved with a board that's helping military veterans to get back into agriculture. So if you know anybody out there that's looking for a job as a military veteran in agriculture, wanting to get involved in a job in agriculture, send me an email, because we've got some new projects that we're looking at. We've even got a new project where if somebody has some machinery that they no longer use, they can donate that to this organization and probably get a tax credit off of that machine that they donate, and then we're either going to give that to a beginning farmer, military veteran, or sell it to them at a real discount. So there'll be some more things come out on that program here down the road. So I think that's a great idea to help our military veterans as much as we can. Flex leases, they've been a little challenge for us, and we're going to be calculating them using the same method as the base calculation. I'm going to go through some examples here in a little bit. The other aspect of this, the lease value cannot be higher or lower than market, and we know market's got quite a spread right now, but if somebody's trying to rent out something at $1,000 an acre, obviously that's going to be a little too high. I mean, that's a real extreme. So if that application would come in, we would contact probably both the beginning farmer and the landlord saying, we're glad you two are considering working out something, but we respectfully ask you to go back and renegotiate your terms to get it back down within the realm of the market. Other provisions, cash or crop share leases or combinations, you can do those. They're non-refundable. The landlord can carry forward unused credits for 5 years. They cannot carry it back. Related party transactions are okay, but you cannot rent from your own entity. Let's say you have a corporation and you as a farmer rent it to yourself. Now that won't be eligible. And then rent to own are not eligible as well. I also might mention back on the carry forward, up till this year, there was no cap, no maximum amount of tax credits that a landlord could get. And we had, I think, 3 or 4 of them this last year that got over $100,000 tax credits for their Iowa income tax. And now the legislature has put in a $50,000 cap. That would be the maximum amount that they would be able to get. Looking more specifically at crop shares, the way we're calculating those, and we're not requiring you to operate this way, but we're going to calculate the tax credit amount by using USDA yield for your respective county. And we're going to use the T yield, which is a historical average of the last 5 to 10 years, and then the previous year's fall price. Last year we had the requirement that on the crop share ones, the beginning farmer needed to submit a crop harvest report by December 1st. Well, come December 1st, and we all know we had an early harvest last year, but come December 1st, there were over 325 crop harvest reports that we didn't have. So instead of getting to go deer hunting on December 1st, I had to go in the office and start shooting out a whole bunch of emails, and it looked like, as I said before, with high fall prices, it looked like we were going to exceed our $6 million tax credit. And so I put in those emails that we would process those applications on a first-come completed basis. And I stressed in there that if we ran out of tax credit of the $6 million before you get your crop harvest report to us, you would have to go back and tell your landlord that because you screwed up and didn't get your crop harvest report in, that landlord now was not going to get any tax credit for the state of Iowa. And I was really fearful on some of our beginning farmers were going to get caught in that. But fortunately, we were able to get them all done and under the $6 million. So to avoid that situation, our board made the change. We're not asking for crop harvest reports. We're going to use the previous year's T yield and the previous year's fall price. So as we're getting applications in this year, we can calculate exactly how much the tax credit is going to be. So I hope that makes sense to you. You're also required to submit an FSA 156 form, and that has to document the same number of acres as what your lease shows. It also has to list the owner as what's listed on the lease, and that also has to list you as the beginning farmer as the operator. The other aspect you see on the bottom of the screen, to break down the acres, again, we're not saying you need to operate this way, but we're going to allocate half the acres of corn and half the acres to beans. I know there are some farmers that are doing more corn on corn, but I know the farm operation I'm involved with, we pretty much rotate it. If it's in corn this year, then next year those acres are going to be in beans. So we're going to go that route, and that will help us all avoid having to use the crop harvest reports. And again, I want to stress that's not we're asking what you to do. That's just the way we're going to calculate the tax credit. The application procedures, you can go to our website and get the application form. The form needs to be signed by the asset owner, the beginning farmer. The financial statement needs to be less than 30 days old, and it needs to be submitted, with the lender's signature on it. I need the background letter, the application fee. There's a $200 application fee, whether it's cash rent or crop share, plus, if it is cash rent, another $50 for each year. So that could be, if it's 2 years, that'd be another $100. If it's 5 years, it'd be another $250. If it's a crop share, it'd be a $100 fee for each year. And the reason on that, on the crop share ones, we'll have to go back and reanalyze and calculate those each year. With the legislature this year, our staff went from 4 down to 2, and so we just have to be a little more efficient on how we're handling those. And so we're not discouraging you from doing crop share, but that's the reason for the additional cost for the application fee. Applications are due the first of the month, fourth Wednesday of the month. It's usually when our board will meet. The taxpayer and the beginning farmer will be issued approval or denial letter, and it'll be extremely rare when we'll send out a denial letter. I will get a hold of you before we take it to the board. I want to make sure everything's clean and done properly before we even present it to the board. So I've been on the phone quite a bit today trying to get some cleanup on some applications we've got, and that's for your benefit as well, so that when we take it to the board, you're pretty well assured it's going to be approved. The certificates are issued by January 1st of the year, and then use credits can be carried forward 5 years. So let's do some examples here. Let's say it's just a simple cash rent, 150 acres of corn, and I should do half of this corn and beans. I got the other ones done that way, but let's just for sake of this, it's $150 per acre, whether it is corn or beans. But gross lease income would be $22,500. 7% of that, that's the amount of tax credit of $1,575. Pretty simple on that one. If it's crop share, and again, 150 acres of corn, and it's a 50-50 crop share lease, and let's say it's 175 bushels per acre, that comes out to 26,250 total bushels harvested. The owner shares half of that, and just for the sake of numbers, I use $6 bushels, and that comes out to 78,750, and 17% of that comes out to 13,387. Okay, flex lease. Let's say the flex lease is based on a cash rent base versus a crop share base, and we'll do a crop share base here in a little bit. Let's say that the 150 acres with corn yield of 200 bushels per acre and beans 50 bushels per acre, and the cash rent base is $150 on the first 175 bushels of corn and 48 bushels for beans per acre. So, and in this case, anything on those bonus yields, they're going to split that 75% to the tenant and 25% to the owner. So the cash rent base, you start off with 150 acres at $150 an acre times 7%, that's the $1,575. So the excess corn, it's 175 bushels, anything above that up to 200. So there's 25 more bushels per acre times the 75 acres times 25% on this excess times the 740, and that's the fall price, the 740 that we're using now for last year, times the 7%, so that's another $243. And the same thing with the beans. It's $10 excess on the 75 acres, the 25% split they're doing, and the $1448 is the current fall price from last year that we're using, so that gets them another $190. So the total tax credit on this flex cash rent would be $2,008. The flex lease on a crop share, pretty much the same way, but when we figure the bonus, let's go through it. The $75 bushels, 75 acres on 180 bushels per corn, 50%, 740 times 70% is 8,492. And see, on the crop share base, it's at 17%, not the 7%. But the excess bushels, the 25 bushels, would also be at the 17%, so it's a 472. On beans, it's also at the 17%, and the additional 10 bushels per acre get at 17%. That price gets them a 462. So it's quite a bit, more from 13,000 back, from the 2,000. So as we all know, the landlord's taking some risk on this with the crop share base. So that's how we're calculating them. Some of these flex leases have some other more sophisticated and complex terms, and what I've been doing on those is I'll call them and again stress that they don't have to change their terms, but we're asking them to establish what we're calling a base acres. So in this case it would be like the 40 bushels or the 180 bushels, and then anything above that would be the excess amounts. Now these amounts here are pretty much what the T yield are as well. So this would be the amount that you got, the landlord and the tenant would agree to, that would be their base. So if a county T yield is 180, but they agree that this is going to be their base yield, that's how we come up with the other 20 bushels per acre and the other 10. So I hope I'm not going through it too fast for you, and hopefully it will make sense. I want to keep moving along here. Now this is the other new tax credit program, and I think it's going to open up a lot of possibilities for you guys and gals as beginning farmers out there. This is just approved this year, it's signed by the governor. You can encourage a landlord to custom hire you to do certain aspects of production of crops or livestock. The contract must be in writing and not more than 1 year. You must provide all the items used to produce the crops or livestock, including machinery and labor. The contract is not allowed if the taxpayer is a spouse, child, or stepchild, brother, sister, or partners in the same corporation. And that's the way the legislature approved that this year. The taxpayer will receive a tax credit at 7% of the calculated payment. At one point, we were going to use Iowa State standard rates, but the way the legislature wrote the legislation, it says that the landlord would be able to earn 7% on the amount paid to the beginning farmer. So, and we're having a meeting Monday to finalize the rules on this, and I need to change this. It shouldn't say using the standard rates, because we just have changed that, and that's what we're going to be proposing to our board. The applications are due only one per year, and we're going to extend that to January 2nd. Some years, December is a nice month. You could still do some chopping of stalks and baling some, corn stalk bales. And so we want to have you be able to get those opportunities, but you need to have the landlord pay you with a check no later than December 31st, and we need to receive the application around January 22nd. We'll probably be a little flexible with postage time and this sort of thing. But if you are hired at the next year, let's say, to do some disking and harrowing and chiseling and planting and spraying and, et cetera, et cetera, et cetera, we don't want to have applications for each one of those items that you did. We want to have you wait and submit one application with that landlord, summarizing everything. And it could be, if you do several things throughout the year, maybe they'll pay you, and hopefully they will pay you on a timely basis of what you did. But we're going to need copies of those checks to document how much you were paid, and then that's amount. We'll take 7% times that to figure their tax credit. So we're trying to make this as simple as possible. And so if you have some ideas or some suggestions that help make it even simpler, we would be glad to consider them. But that's where we're leaning right now.
Steve?
Yes.
Hey, thanks a lot, Steve. This is Andrew again, and just want to thank Steve for coming on and giving us some information, but want to possibly have some time for a few questions here. So if you look to the right of your screen and type in the little box any questions you may have, I'll give them to Steve so he can answer them now. Steve, one of the questions I got is how do you work with bankers, or if their banker's not familiar with your program, how do you go about working with those people?
Well, hopefully they would call us and hopefully ask some questions, and we can then really answer their questions. One of the things you can see on this screen I've got here now, we're doing beginning farmer workshops around the state at community colleges, and we're inviting all the ag lenders to come to those workshops and learn about the programs. So that's one way. The other aspect, as I said, to have them call us and walk through all their questions, encourage them to go to our website, go through the frequently asked questions and things like that.
Okay, another one I got here on the beginning farmer tax credit. Did you say the owners, can they be in an LLC or partnership or corporation as well?
I'm sorry, which one?
The tax credit program for can the owner of the farm who's doing the lease be in it? Okay.
Yes. Yep.
Okay.
We would only issue then the tax credit certificate to that entity, and so we'll need that entity's tax identification number, and then they'll take that to their tax person, and then that tax preparer will work out how they split that up, with their taxes.
And then on the custom hire legislation that you guys just passed, how can you get more information on that? When will you know more so people can find out how they can use that program?
Well, I'm hoping that we'll get our rules worked out Monday. We'll present those to our division board the fourth Wednesday of the month, and then the Iowa Finance Authority board has to. Still there?
Yep.
Getting a lot of background noise here. Then the Iowa Finance Authority board will have to approve them like the first Wednesday of the month, and then I'm hoping we'll be able to send out a press release. We'll send it out to all the lenders. We'll send it out to all the community colleges, and we'll probably also send it out to probably all our beginning farmers who have submitted applications to us that have email addresses.
That sounds great. Well, Steve, thanks again for coming in. People's Company really appreciates you working with us, and it's a great, People's Company is a good success working with you guys, not only with trying to find capital for land purchases, but also working with our farm managers to hook up our landlord tenants with beginning farmers. If anyone has any questions or any further clarifications they need, feel free to contact me or Steve directly. And I think, Steve, you have your contact information there on that last slide if you want to go to that.
Yep.
And we're on our third week, I think, of our People's Company Summer Webinar Series. So make sure to tune in next Thursday with Brian Feldpouch and Daryl Mills going over farm lease terminations and considerations for the 2014 farm year. I appreciate it, and everyone have a good evening.
Yep. Wish you all the best. Thanks.